in trading, especially particularly in the bonds in East Africa. The markets at Altex open at exactly 15 minutes past the hour of 8 and close at 15 minutes past the hour of 3 p.m. Visit Altex to learn something new and make yourself some money off the different markets that we have here in East Africa. Now, today is a Wednesday, of course, as we come to almost the end of October. It is the 26th, and I'm very glad that this morning is a brilliant morning on the stock exchange here in Uganda as well. Abroad on the US stock market. Now, yesterday, the US stock market started the Tuesday's trading ahead of the corporate earnings from some of the market's biggest players. We're talking about the big indexes like the S&P 500, the Dow, and the Nasdaq appreciating in value for yesterday's trading, as of course we draw closer to the earnings week. Now, the S&P 500, which tracks the aggregate performance of 500 big companies, the biggest companies in the United States, and is also basically market capitalization weighted, and about 1.1% on its value yesterday, while the Dow Jones Industrial Average, which tracks the aggregate performance of over about 3,000 stocks on the US market, ticked up by about 0.7%. Now, the tech-heavy Nasdaq, where we find Apple, Google, Facebook, and all other tech companies, went up by 1.8%, which was the biggest gain for the day yesterday on the US stock market there. Now, the jumps continued, and the stocks gains from Monday, as well as the other major indices rallying against, of course, the hike in the Federal Reserve rate there ahead of the slew of the third quarter earnings this week. Now, this week particularly in the US stock market is a unique one because companies are unveiling their earnings for the third quarter. And when you talk about the third quarter, we're talking about the last 3 months, that is September, August, and July. So we took looking at this quarter, and companies are bringing in their performances and earnings on, of course, what they've been able to do within this quarter, and that's why we are seeing this much activity at the moment. Coca-Cola posted earnings before the bell on Tuesday, meaning Coca-Cola put out its earnings at least by Tuesday before the bell rang at Wall Street in New York. The Atlanta-based company raised its full-year outlook as quarterly profit and revenue topped expectations. Looking at General Motors, stock moved higher after the car maker topped profit expectations but fell short on revenue. Now, of course, revenue versus profit, definitely sometimes they don't move in the same direction. So we're seeing General Motors increase its profit but falling short on revenue, which is a good and bad thing at the same time. And depending on the type of investor you are, you can view this as an advantage or as a disadvantage. But General Motors there actually threw us a little bit more profit for the third quarter and a little less revenue on their, third quarterly earnings that were, given out during Tuesday trading. General Electric, the manufacturer of the General Electric engines, those that we find on the Boeing 777s and other Boeing aircrafts, registered also a profit. Meanwhile, it fell in its latest quarter as the company plans to cut costs in its renewable energy business as well. The pace of earnings reports has really picked up steam, and the results this morning have actually been somewhat lackluster, looking at least about the mixed reactions from big investors like Paul Heike. And head of course, the portfolio manager of Bestbooks Wealth Management Services wrote in a note of the nearly 40 reports so far this morning, 64% have exceeded the EPS forecast and 62% exceeded revenue estimates. Also tightly, more companies have lowered guidance than raised it. That's according to Mr. Paul Hickey. Now, of course, various analysts have been able to come out and say this could be a big time for the stock market in the United States, as we are looking at companies coming in with big earnings. We've seen Coca-Cola, General Electric, and of course a little contraction in revenue for some. But we have companies like Microsoft, Alphabet, Visa, and Chipotle that are set to report their earnings after the bell today, and even some of them did before the close of yesterday. Other key mega cap tech firms like Meta Platforms, Apple, and Amazon will report later this week. As of course we wind up the trades on Friday, we should have seen some of these companies report their earnings. Now, well, if we take a look at the giant step back, what we are looking at this week is a cumulative about 7 trillion United States dollars amount in market value of companies reporting this week amongst the big tech players. And when you look at associates, and we are looking at some of the people especially the S&P 500 being the top movers there of the markets. Now, about a fifth of the companies in S&P stands for Standard & Poor. That is an index that was created way back in the 1900s. And this stock exchange, we are seeing that a fifth of these companies within this index have reported third quarter results as last Friday, and 72% of those reported earnings that beat the Wall Street expectations, according to FactSet. So the markets look good. Companies are, surpassing the expectations of Wall Street and various analysts, and hoping for a better, of course, earning coming, of course, to the last quarter of the year. Shares of Adidas moved lower after the Atlantic brand ended its partnership with Ye, and also known as Kane West, with immediate effect. And in a statement on Tuesday, the sportswear maker said it does not tolerate anti-Semitism and any other sort of hate speech in some of the comments that were given out on Adidas there. And looking at the indexes right now from yesterday's trades, let's have a look at some of the headlines here. We're seeing the S&P 500 closing yesterday with about 48.05 gained on their index there, and that was a 1.27% on their daily gain there. And then the Dow Jones gained about 248.65, and that was a 0.79% on them. And then Nasdaq had about 11,166 closing the day, and gaining about 213.55. A big gain there for Nasdaq. Now, for those of you who may not understand some of these indexes, when you talk about an index, we are literally talking about a tracker of performance. So looking at, for example, the S&P 500, the Standard & Poor 500, that is the index that tracks the aggregate performance of the top 500 US companies. When you look at the NASDAQ tracks technology companies. We're talking about Facebook, Amazon, Google, and the like, and other upcoming fintechs, and so on. This is a technology-driven kind of index, looking at tech companies in detail. And then the Dow Jones was begun by Edward Jones with another journalist, and they began this way back in 1970s. And this is also another index that tracks over 30 stocks, 30 top stocks on the US stock market. Particularly, the US has two stock exchanges, the New York Stock Exchange and the NASDAQ Stock Exchange. New York Stock Exchange has both the S&P 500 as well as the Dow Jones Industrial Average companies, whereas the NASDAQ has all the three, the NASDAQ Composite as well as the S&P 500 and the Dow Jones. Literally, you must be aware. As an investor, the markets provide you with limitless opportunities. You can invest in the US without even having to travel there. Of course, there are several companies that have been able to avail themselves to help you do just this, or even online. If you get to learn about these companies and are interested in some of these investments, you have to make a move, because this is where the world is heading. We don't have to limit ourselves to Africa or where our boundaries lead us. We must blow the boundaries away and make our investments for the future. Basically, that's how the markets moved in the United States. And at the moment, of course, markets are rumbling and different things are taking place. So you must keep yourself informed if you're to become the next big investor as well. Now, let's come back to Africa. Well, on the African continent, before I come to East Africa, yesterday was a good day for several big stock exchanges. Looking at, for example, Johannesburg. Johannesburg Stock Exchange yesterday on its J203, which is a benchmark index for the Johannesburg Stock Exchange. It gained about 819.71 points on its index there, and this was a 1.26% gain on the index. Currently, the J203 stands at about 65,795 rand there on the Johannesburg Stock Exchange rather. However, the exchange is still suffering a smaller year-to-date loss of about 10.74%, but pretty much better than many other stock exchanges on the African continent. We're looking also at Ghana. Ghana Stock Exchange also appreciated in value by about 14.13 points, and this was a 0.58% that was added to the value of the Ghana Stock Exchange. A very good outlook for this West African stock exchange in Tuesday's trades as well. And away from all that, Zimbabwe also appreciated. What a good day for these African stock exchanges. Zimbabwe Stock Exchange had about 91.34 on its value that was added, and this was a 0.63% gain that was registered on this particular stock exchange. And away from Zimbabwe, coming back to our homeland, Uganda. Uganda as well performed pretty well on the Uganda Stock Exchange. We had an appreciation of close to 14.39 points, and we closed the day with about 1,262.52 rather points on our all share index, which is the benchmark of the performance of the stocks here on the Ugandan Stock Exchange. And away from looking at the all share index, of course, the all share index gives us a good picture of what's happening, but not entirely. And looking at the details here, we had about 4 of the 18 companies that are listed on the exchange participate in the trading. If you remember, on Monday we had a big volume coming from Umeme. If you followed very closely on the stock market, Umeme yesterday on Monday had a pretty good volume and good turnover there, which has actually broken a record. We had about 1.96 billion that was transacted on Umeme on Monday. However, the trades contracted slightly in terms of turnover. Of course, not slightly in terms of turnover, but in terms of the volume, they contracted slightly and hugely contracted in terms of the turnover. The participants included Stanbic, as well as Uganda Clays and Bank of Baroda, Uganda. And the day ended, unfortunately, with none of these coming in as a gainer. The prices remained stagnant for all the participants. However, looking at the top gainers here, we had Equity Bank, who came in as a top gainer amongst the 6 top gainers we had, and Equity gained about 3.15% on their stock price, closing the day with about 1,471.22 Ugandan shillings per share. What you have to note about Equity, however, is that Equity is the biggest, has the biggest market capitalization on the Uganda Stock Exchange, meaning it's the most valuable company on the stock exchange. Equity was closely followed by Nation Media Group, who gained close to about 2.88% on their stock value there. KCB also came in as a top gainer. Well, NMG closed at 517.68, whereas when you look at Nation Media Group, they had about 1,176, and then Jubilee Holdings Limited had about 7,544.93 Ugandan shillings and a 1.01% that was gained on the stock exchange. And then Kenya Airways had about 120.53 Ugandan shillings closing price, which was a 0.07%. That was also gained on the stock market. East African Breweries Limited gained about 0.06% on their price, closing the day with about 5,310.56 Ugandan shillings on their prices. Pretty much we didn't have a lot of much effect on the local companies, because as we know, most of these movements for cross listings, as I've explained before on the show, are definitely due to factors outside the demand and supply. And we are more interested in the demand and supply. However, we also must understand the factors that lead to these movements. Basically, we have like about 2 or 3 factors. Number one is the foreign exchange rate. So when prices change on the local stocks or the primary stock exchanges of these particularly cross-listed stocks, definitely these prices have to kind of agree. They might not agree 100%, but they must have a certain limit within which they can deviate. And that, of course, brings in the factor of the foreign exchange rate, which varies with time, and definitely depending on the imports and exports and so many other factors. So at the end of the day, we have the exchange in Uganda kind of converting the figures here to more agreeable prices with the primary stock exchanges, particularly the Nairobi Stock Exchange. So you have that conversion, which brings in a factor of foreign exchange, which can actually change the prices without any trading done on these companies. We could also have other factors, such as, for example, activity on the primary stocks exchanges. Looking at, for example, Nairobi, if at all a company like KCB had pretty good activity on the primary stock and didn't have any activity here and it had movement, definitely that should shed off to the cross-listed exchange as well. And that's how some of these stocks actually get to move. On the losing side, however, we had particularly 2 losers. That is Centum, who lost about 2.76% on the price there, and MTN, who lost about 0.15%. Yes, MTN, Uganda, was a loser yesterday on the stock market here at the Uganda Stock Exchange. The benchmark index, like I shared, declined slightly by about 14.39 points, and that was a 1.15% decline, closing the day with about 1,262.52 points, representing a 1-week gain of close to 0.1% and a 4-week gain of 1.33%. Literally, we're still on a gain because of the big trades we had last week as well on Monday, which are still kind of sustaining our gains there. But the overall year-to-date loss was maintained at above 11%, to be precise, 11.13% on the year-to-date loss there. The local company index, on the other hand, decreased by 0.08% because of MTN, which came in as a bottom loser, and this was at closing of about 271.54 points, and the 1-week loss now of about 0.67% has been registered on the local company index. A 4-week loss of about 0.57% has also been registered on the local company index, and a year-to-date loss of 16.36%. Well, what should we expect for the last quarter? Well, we could expect big earnings. There are companies usually which do this every end of the year. You know, they have kind of a declaration of the quarterly results and sometimes declare dividends. So we could look out for some of those companies. And if you're out there and looking for a long-term passive source of income, yes, you could look at some of these companies that issue dividends. I might not point out each of them, but if you look at, for example, the 18 listed stocks on the stock exchange, you could choose at least 4. You could find like 4 which actually have good dividend policy. When I was in an interview with Mr. Musazi from SBG, one of the key factors he pointed out when you're picking a share, make sure you pick a share at least that can give you a good dividend policy, that has recorded a good dividend policy within the last few years of its listing on the exchange. And that will assure you of that passive income coming in as you, of course, wait for the bigger gains on the capital gain, as well as you trade at higher prices on the stock exchange. But basically, this is what took place on the market. Like I said, of course, because of Monday's big volume by Wumeme, there was a contraction in the volume, a significant contraction, and even a bigger contraction in the turnover. From yesterday's almost above 1.69 billion Ugandan shillings to today's about 12.7 million shillings. That was a slight decline in the turnover that was registered there due to the reduction in the trading volume on the bigger companies. However, the market capitalization of the Uganda Stock Exchange was maintained at about 21.7 million trillion Ugandan shillings on the stock market. We are going to take a quick breather. When we return, we summarize this market and look out for some opportunities, as well cross over to Nairobi and find out what took place on the Nairobi Stock Exchange. You're watching Financial Markets. I'm Anthony. Stay with us. We'll be right back.